What's up, y'all? My name is Karina Cook. I am a tax and financial strategist. I'm a CEO, a businesswoman, a faith-led businesswoman at that. What's up, y'all? It's Karina Cook. I am your favorite tax and financial strategist, CEO, and faith-led businesswoman. Welcome here to podcast Evolving Out Loud. I'm so excited to be here with y'all today, where we talk about business, entrepreneurship, finance, faith, and structure, strategy, and processes. All the things you could think of, really, when it comes to business, but mainly finance. I'm happy to have you guys here today with me. And today, I really thought it was important for us to talk about why, when you're in a position of making money, but you're still giving it all away in taxes. This is whether you pay taxes, a high amount of taxes, or just a little bit, doesn't matter because you're getting taxed even outside of your business. And the important thing to remember in this situation is that you can't control, especially as a business owner, what you pay in taxes. The first thing I want to point out is when you're making 6 and 7 figures as an entrepreneur, okay, or you're striving to make this, and you're making this money, but you're paying it all in taxes, or you're running from taxes, you're avoiding taxes. There's a lot of fear around this conversation, and a lot of people, they don't want to deal with it, and rightfully so. However, taxes go back all the way back. We could talk about it. There was taxes in the Bible, tax collectors, and we're not going to get in the history of it today in this episode, but taxes is here, guys. And whether you run from it or face it, it's going to be here. And as the great Benjamin Franklin says, is one thing is for certain, death and taxes. So you cannot run from this. We cannot live forever, and we also will be paying taxes. And if you can put yourself in a position to minimize your business taxes because you're still paying taxes in every other area, then you're winning. And, it's wild because this is an area that many get really scared of, especially as entrepreneurs. But if you think about the tax code, it's literally a code designed for business owners. And there's a section code 162A specifically says if something is ordinary and necessary for your business, then that is something that you can use that allows us as business owners to use that. And, why they do this is because we are helping the government stimulate the economy. We are creating jobs. We are circulating money. And then when we start to talk about real estate, we're creating housing. And so that's one less thing that the government has to do. So in that case, the government gives us incentives to take advantage of these codes. I look at it like this. If you do not read the owner's manual, you will not know what to do. There's little pieces of the owner manual. Maybe you put something together, but it's however you thought in your mind it was supposed to be. So you're taking these write-offs. Maybe I am taking off my home office or writing off some of my car, but you're not really using it to the extent that it can be used with, right? And that comes with experience. It comes with working with people, and it comes with not being so afraid and having fear take control of what you pay. Because what happens if you avoid this part of your business, this part of finance, it chases you. And I don't really know why. I know why people avoid it, but I just feel as though you may as well deal with it head on, because then you'll have more control. I get entrepreneurs and business owners come to me because I do tax planning. I help entrepreneurs legally save money in taxes and invest this in other areas that is going to benefit their business or their life. I get entrepreneurs coming and they may have already had 2 to 3 years built up of running from the IRS, and sometimes way more, where there's a 20,000 bill one year, there's a 10,000 bill next year, there's a 30,000. Now by the time they come to me, they're about 60,000 in debt, but you still have to carry the following year. So that means you have to make a lot more money. You have to be more strategic, and then you have to pay the professional to help you. When I think about these things, it's more like face it head on and know your options. Because when you do that, what happens is you start to save way more money, right? And so let's say you have a good year. You have a good year. The year is going, you're like, okay, I know in the back of my head that I'm going to be dealing with taxes. That is the time. When you get that feeling in your spirit, go for it. Because once you start saying that I'm going to take advantage of this, it's not just taxes, y'all. When you start using this money that the IRS is technically asking you for, you can use that to put in another area of your business, to put into your family, and to invest in your retirement, invest in other assets. You can invest into things that is going to yield more money and you'll feel good at it. And when I tell you taxes, especially, listen, it becomes this like never ending game. You get money in, you're like, okay, how can I do this with taxes? Like a puzzle. And I start to feel like people get addicted to not wanting to pay the IRS in a way that allows them to play the game. Let me say that again. People get addicted to not wanting to pay the IRS with their taxes, so they do things and it becomes a game. Literally, y'all. Literally, if you don't do this, because you got to realize the IRS is not your financial advisor. You're paying money out to them, and you will be as you make more income. They're not your strategist. They're not your wealth coach. They're there to collect the money, regardless if you're educated or not. And if you do not have a strategy in place as you're scaling and getting more income and you step into business and you're acquiring assets, then they will be your financial advisor. I say this because it's not only clients I deal with, we hear it in the news all the time. High profile celebrities who are dodging the IRS. And there are other ways because then 5, 6, 7, 8 years, if the IRS can still come for you, they're going to come. And you want to avoid that because the power is in your hands. So like when I literally say that you lose is not knowing the write-offs and deductions that you can take advantage of. And for me, we look at clients, I'm like, look, what's the first thing we can do? We're going to look at your low-hanging fruit first. I'm all for acquiring assets, getting into real estate, getting into all these things. But again, I'm all for structure and foundation. And don't get me wrong, what's good for you may not be good for someone else. But if you don't have the basics set up and you can't rely on even having the basics set up, then why even go to the big dogs, the advanced strategies? So what I tell you is like, look at your low hanging fruit, look at what you're doing now, diversify what you're doing, use the write-offs and maximize on the write-offs as much as possible because they're there for you. The key thing I do is like, okay, we need to look at what you're already using and we need to maximize on what you are already using and take advantage of that in your business. So I think that what happens is as entrepreneurs, when you come in business, a lot of the times I see commingling of funds. Right, whether it could be that you're just trying to get it separate. It could be that you're using your personal credit card for your business expenses. And I see this too often. If you're not keeping track of that, it becomes a huge nightmare. And you end up paying more literally to get it fixed than you would have been in the first place of just doing it correctly. But you avoid the things because you just put it off and you don't want to do it. It literally prevents you from using strategies throughout the year. Why? Because let's say in a prior year, you just didn't do what you didn't do, right? You used all these different cards for different things. You weren't organized or you just didn't have a plan. And now you come in 2 years because you still didn't file your taxes. Well, we can't go all the way back there and make a huge difference, right? We can use what we have now, but there aren't really strategies that we can do. So the difference of being proactive and reactive is using what you can in the moment currently proactive right now so that you can use strategies that align with you, and then you can lower what you would potentially owe the IRS. And so let's say like people, we talk about the Augusta rule all the time. The Augusta rule allows for you to use your home and rent your home to yourself, right? And I see people who are business owners, who are corporations, and they don't use this strategy. You could be a corporation, use the strategy, do the Augusta rule, and literally rent your home to your business and not get taxed as a personal individual on your what you've gotten from your business. So up to 14 days, use that for your meetings, use that for a team building session, use that for something in your business where then you can leverage this for 14 days and your business gives you the money, right? Your S corporation will give you as an individual some money and say, hey, I want to rent out your home for my business meetings up to 14 times. And as your business start to do that, then you don't have to take that income in. And then on top of that, not having to take that income in, your business gets the write off. But you can't do this if you do your taxes late. Because one, there's requirements. The requirement is that you have to create a agreement. You have to have this, you have to have the paperwork for this. You have to have this agreement between you and your corporation and how much it's going to be. And there's documents that you have to file and all these things and transfers. You can't just say this and then take it on your tax return. There has to be some form of withdrawal into one account. And if you don't do this ahead of time and the right way, then you can't take the write off. This is what I mean when I say being proactive and not reactive. So when I say that not knowing the difference between write-offs and deductions and waiting until tax time to get organized is the worst thing you can do. It's going to be daunting on you. You're going to be overwhelmed, annoyed, and pushing it back. Your accountant or tax professional is going to be like, listen, and your options are very limited. I just want y'all to know that strategies is not just for the wealthy. People became wealthy by using strategies. Okay? And so that is the difference. You don't have to use these big strategies, but I would tell you to practice the little ones first. Get good with that first. Trust me, and your accountant and your tax strategist will love you because you are organized, you have it together. It's easy for us to implement to work and to do things with you and for you because now you have that foundation. The foundation may not be being tax savvy, but it may be that you have your books in order. That you're coming and you're like, I know what I want and what I want to get out of this. What I want to get out of this, and you know that you're tired of doing the same thing and not having a system. I remember having a client come in paying so much money in taxes. This client had worked with a professional before that was an accountant, but the accountant only prepared the tax returns. That's all. And that's another thing. You got to know the difference between having the right person in finance because the titles can get intertwined and then you don't really know and you think the accountant's supposed to do this tax strategy or educate you, and sometimes it's not that. Maybe they're just doing bookkeeping or tax prep. But this client had a tax professional and the tax professional did not strategize. The tax professional did the tax return each year and told them what they owe. And by the time they came to me, they're like, listen, I owe $30,000. Why? I'm tired of it. I'm tired of it. But by this time, it was coming to me to do tax prep because they were not satisfied with their current professional. At this point, it's like, okay, let me actually see what happened beforehand. So I go look, and again, prior years, continuing to owe. And as this client begins to scale, I'm like, listen, we got to put some strategies in place. We put 3 strategies in place, y'all. Instead of this client owing $30,000, the client got a $10,000 refund. So technically, we saved a client $50,000. Why is that? I tell you why. The client knew what they wanted. They wanted to start saving. They were tired of it. Her books were in order and she was ready to move on. Will you put yourself in debt every year with the IRS? One year you owe 10, another year you owe 5, another year you owe 6. Now you're on different payment plans with them. And now you're worried about the tax strategy. It hurts more that way than to say, I'm just going to do it this way. So there are things that you can do to put yourself in position for taxes and to do it the right way. And as you start to scale your business, I love the idea and to guide my clients through diversifying. And so I'm never going to tell my clients just to be on a Roth IRA every year. I'm never going to tell my clients to only do a solo 401k every year through and through, and that's all. But there are things that you're going to do in the beginning to build consistency, to get compound interest, to help with your family members. But as you continue to scale and your business continues to develop, now I really do want real estate. I really can manage a rental property. I really do want to leverage doing this. I really do have this opportunity to build an asset in another place. Then that's where things get fun, y'all. But in the beginning, I said this before, your strategy needs to match your stage. And what I mean by your strategy should match your stage is I see entrepreneurs get into this thing of, I want to do it this way because this is what somebody said on social media or because this is what someone else did. And this someone else had a whole different circumstance than this person in front of me. And so where you are right now, doing 2 to 3 things or even 2 things can change your whole situation. I would never recommend somebody just jump into real estate yet. I would always say, where are you? Let's understand where you are. Do you even have the skill set or discipline to manage rental property yet? Do you have the time? Do you have the resources? How is that looking for you? But that's always a avenue that you can go down. This is where we start to have fun, but I have to educate the clients on what's important right now. And can we build up strength to do that? Because again, even the wealthiest people, unless they start out with hundreds of $1,000, 6 to 7 figures right away, but even the wealthiest people, when they're doing strategy, the strategy is how they became even more wealthier. So I challenge you guys to look at what's going on with you. What are you fearful with your taxes? Where can there be some improvement? What are your 5-year goals? And what do you need to do now to make sure that your foundation is set so that when you start getting into these tax strategies that you're really, really looking forward to, your foundation is set and you have all the other strategies in place also. It's all about diversifying, you guys. It's all about getting ahead of the curve, being proactive and not reactive, knowing the difference between being organized and disorganized, and not trying to take shortcuts. Because taking shortcuts will actually slow you down if you're not taking the right shortcuts. So I challenge you to look at where you stand with your taxes and get ahead of the curve now. Do not keep running from it. If you are looking to get a tax professional, understand what that professional is, what they do, how they're going to work with you, and make sure that it's something that makes sense. Okay. And I hope this has been very helpful for you guys because taxes will never go away. And I believe that everyone can control what they pay in taxes. So if this resonated with you, let me know in the comments. What strategies are you currently working on in your business? And What's your biggest strategy that you're looking forward to? All right, y'all. Until next time, here on Evolving Out Loud. Peace out. Exciting to say the least, and I'm happy that I'm doing it with you guys. Until next time, I love y'all, and welcome to Evolving Out Loud.